Assalamualaikum and good day to all. Okay, so in this video, I would like to continue on the second part of the chapter 9, okay, on national income accounting. So in the previous lecture, so we have discussed the definition of national income accounting. So basically, it focuses on the GDP calculation. So as what we have discussed before, there are three methods. Okay, first we went through the concept of GDP, GNP. Okay, so these are the things that if you find it a bit difficult or confusing to memorize, okay, you always have your notes to refer to whenever you do exercises. And then, but at the end of the day, what matters most is uh, for this topic, okay, is the three main methods to calculate GDP, okay, the expenditure approach, the income approach, and finally the production approach. Okay, so our last lecture we have discussed on the expenditure approach. Okay, so you can refer to the video in your OL. Okay, so on that lecture we discussed the components for the expenditure approach, as what you can see from this slide. Okay, is based on the equation of C plus I plus G, okay, consumption plus investment plus government purchases plus X minus M, or net export. Okay, export is plus, import is minus. Okay, so this is the most common approach to calculate GDP, okay, expenditure approach. So in the following slides, okay, you have the example from different reports, okay, but I don't want to go too much into detail on the example. So here, for example, you have this one uh, simple way to calculate GDP at market price, and then GDP versus GNP. So you can see here from this data set here, how do you calculate GDP, and how do you calculate GNP, and how do you calculate GNP at factor cost, meaning you subtract tax and you add subsidies. And finally, how do you arrive at NNP, net national product, okay, using the expenditure approach. Okay, so the next slide, the purpose for the second video, this video, okay, is to focus on the remaining two methods: production or value added approach, and finally the income approach. So between the three, okay, the two common ones are expenditure approach and also income approach. For value added or production approach, it is not that I'm not saying that it is not common, okay, but the way to calculate the production approach is uh, if you look at the slides here, okay, it is quite simple actually. So but in terms of uh, what you normally see at for quizzes or tests, okay, in your test banks or in your past year's questions, usually the questions will focus more on the expenditure approach and also on the income approach. Okay, so I'm just going through these slides very briefly, because at the end of this video I will show several questions from the past year question, and we will discuss the answer on tomorrow, okay, on Monday tomorrow. Okay, and then and hopefully in so tomorrow, after we finish discussing the questions, we will start with topic number 10. Okay, so for the production or value added approach, okay, so basically it is if you look at this concept here, okay, is based on the word value added is based on the process or the stage in production, okay, compared to expenditure approach, where it's based on consumption, okay, the consumption, the investment. So this is you are summing the value added at each stage of production, okay. But the one of the most important concept in or thing that you need to understand under production or value added approach is to avoid the issue of double counting. Okay, so which is you want to exclude intermediate goods. Intermediate goods mean goods that you create, okay, as an input for another product. Okay, so that will be what intermediate goods is. Okay, so whenever you use production value added method, so you want to make sure that you avoid double counting problem. Okay, so the thing that you need to take into account, okay, is not to add the value of intermediate goods. Okay, value of production less, meaning minus the value of intermediate goods. Okay, so this is the issue of double counting that usually occurs whenever you apply production method or production approach in calculating GDP. Okay, so you will see this concept in the questions, in the past year question that we will discuss, that I will show later in this video. Okay, and then we will discuss the answer tomorrow. Okay, on the issue of intermediate or double counting in production method. Okay, so that is usually the thing that you want to pay attention whenever it comes to production or value added approach. Okay, and then in terms of the example, I don't want to spend too much. Okay, you can go through the slides very briefly. Okay, but for because you have a number of chapters, okay, for your under macroeconomics syllabus. Okay, your test 1 and test 2 already covered the microeconomics, so the remaining test 3 and test 4, okay, will cover the macroeconomic topic. Okay, which you have around uh, roughly around 7 topics in total. Okay, so for the first one that you learned the previous week, okay, is on inflation, unemployment definition. So for this is focusing on the GDP calculation method. Okay, so the third one or the third approach is income approach. Okay, so income approach is by summing all different sources of income. So you can see also from this definition. So what I want to stress is it's quite impossible for you to memorize all of these components. Okay, but of course the one thing that you are lucky this semester is because the test is based on online assessment, meaning you can always refer to your note. Okay, unlike actual test, if you go to the exam hall, so you need to in a way, okay, repeat and try to memorize in terms of the components that is involved in the income approach method. Okay, but for this particular semester, okay, so the income approach is based on summing the GDP is based on the addition of wages, salary, rents, net interest, profit. Okay, and then you have GDP. The GNP is GDP plus net factor earning from abroad. Okay, meaning the income which is earned overseas outside Malaysia. And then you also have the net national product. Okay, GNP minus depreciation. Okay, and then so this is basically the formula that we are interested to focus. Okay, GDP is national income plus depreciation plus tax minus subsidies. Okay, plus net factor payments to the rest of the world and other. Okay, so this is so you are this basically you are adjusting national income for certain things. Okay, uh, so is the best way to visualize this is to look at the example, okay, of the, because this is just detailed definition of the components here. Okay, but you don't need to know in detail. Okay, each of the component, as long as you know what are the components involved in calculating GDP using income approach. Okay, national income minus income from the rest of the world plus income earned by the rest. So from you minus by you gonna add. Okay, so so make sure you can distinguish between these two, and then plus indirect tax and the rest. Okay, so Okay, again, this is the rest are just detailed description. So if you look at this table here, so it's giving you the summary of the approach, the income approach. So sometimes you will be tested if you're given a table, okay? So certain components may belong to the expenditure approach. Certain components may belong to income approach. So you cannot simply add all of the components in the table to get GDP. So that will be like a test of your understanding, okay, which item belongs to GDP under income approach, which component belongs to the expenditure approach. Okay, usually we compare between the two. For production approach is quite different, okay, but for income versus expenditure approach, okay, so you can compare this table and the one under expenditure approach and see what are the main difference in terms of the components. Okay, so when you do some exercises online, okay, if you look at past year's question in the library website, okay, and then you may be able to distinguish why which one is under income, which one is under expenditure approach, and what do you need to add, what do you need to minus. So the main thing is certain components you need to deduct. Okay, for example, uh, for national income, total is 8199, and then compensation, the rest you plus depreciation. So this component here is already given in the if you look at the this table here, okay, you whatever that is given in the formula here, okay, you can trace back, okay, at the definition from the um, here, okay. National income equals to compensation. This is national income, okay, not GDP. Okay, national income equals to this component, okay. But the income approach, okay, national income plus depreciation. So national income just now, okay. What are the component of national income? These are the component of national income, okay. So that the main one is this one, okay. GDP equals to national income plus this plus this plus this. So when you look at the example in this blue table here, okay, GDP using income approach is the summation of national income plus depreciation plus tax minus subsidies, net factor payments to the rest of the world. So when the word net, okay, net means from compared to by. Okay, if you look at this uh, okay, this one just now, right? Income earned from the rest of the world minus income as earned by the rest of the world. So this, when you compare between these two, is what we call uh, net income from the rest of the world. Okay, so from you minus plus is by you gonna add, okay, or plus sign. So what you see here, net factor payments to the rest of the world is the result from the plus and minus just now, okay, by and from. So here is already given you as the net component, okay, which is so if the value is positive, meaning you're gonna add lah, okay, and then other is negative, so basically you add everything, okay, to arrive at the GDP value of 10,205. Okay, so this is and yeah, this is also similar concept of GDP, okay, okay, to calculate GDP at income approach. But for example, this one I think is quite simple to understand. So the goal for this video is for you to be able to distinguish, okay, between the three methods: income approach, okay, what are the components inside, what do you need to add, what do you need to minus, and also expenditure approach, the one that we learned last week. Okay, and finally production approach, which the thing that you need to highlight is okay, the issue of double counting. Okay, so I think that will be the goal for this. So you can look at the other examples here, okay, but what I want to show you for in the remaining of this video, okay, that we will discuss tomorrow morning before we start with the new chapter. So it's important that you go through this video and the previous video so that you are able to okay, hopefully understand better on the national income accounting method. Okay, because the next few topics will be more on the concept, okay, conceptual. This particular chapter, you have some calculation involved, meaning to what will be the value of GDP using expenditure approach, income approach, and even or maybe production approach. Okay, so let's take a look at some of these questions which is relevant for topic number 9. Okay, national income accounting. Okay, so figure out what would be the answer for this. Okay, and then the issue of double counting, okay, will not occur if GDP is computed by summing. Okay, so it will not occur if by summing all of what. Okay, so is it A, B, C, or D? Okay, and then the next question will be, what does annual economic growth refer to? So this part, okay, I already mentioned in the previous video. So look at the previous video and you will see and you will know what will be the answer for this. Okay, and it is also given in your slide as well. Okay, how do you calculate economic growth? Okay, and then next, which one of the following would not be counted as final good for inclusion of GDP? So the word final good, okay, and what is final good and what is intermediate or input. So final good is finished product, okay, so will not be counted. So which one is not considered as final good? So that is the answer that you want to find. Okay, so again, this is one of the uh, this is actually part of the expenditure approach concept. Okay, because expenditure approach is based on final good, meaning consumption of final good. Okay, and then 13, to derive NDP, net domestic product, from GDP, we must subtract what? Okay, so again, okay, NDP or net domestic product, okay, go to the slides or your notes, okay, from the book or whichever material. You can just Google this term. Okay, so what is do you need to subtract to get from GDP to get NDP? Okay, and then question 14, spending on capital equipment, inventories, structures is referred to as what? Consumption, investment, G, or net export. Okay, again, all of these components belong to the expenditure approach. Okay, so take a look at the expenditure approach section in the lecture, in the slides, and see which one does this belong to. Okay, and uh, okay, and next, personal income is, okay, so personal income is what? So again, this is you can get the answer or the concept of personal income under national income approach, under income approach of GDP. Okay, see what is the definition for personal income. Okay, okay, so this is what I mentioned as one of the focus of chapter number 9, okay, is the calculation of GDP using either, usually is using GDP expenditure approach or income approach. So you can see here, some of the components may belong to expenditure, some may belong to income approach, okay. So you cannot have both at the same time. So if you see that to calculate GDP, you can only use one approach, okay, which I think what is the most common one, if you look at the components here, you can see that many of them belong to the expenditure approach. So calculate using expenditure approach, although it is not mentioned here, okay, but it is understood that, okay, the components, most of the components belong to expenditure approach. Okay, so calculate GDP based on that. Okay, so that will be the questions that we will discuss tomorrow. So Okay, I will see you tomorrow. Okay, around 8:45. Okay, to start to discuss the answer for this, and then we will continue with the new chapter, chapter 10. Okay, thank you. Assalamualaikum and good morning. Good evening.